Hello, we're looking here at F8 December 14 multiple choice questions. I'm going to do this in sections, so we'll look at questions 1 to 6 here. Remember the exam technique that we've talked about previously, but we're more focusing here on learning from the answers. So that means learning from the incorrect answers as well as the correct ones, because often in future exams, similar questions will come up, even the same questions with different outcomes. So you need to understand why an answer is what it is and why other answers were incorrect. So let's do that as we go. Also, I think it's best that as we go through each of these, you have a go at the question and then work through the answer with me each time. So stop the video, have a go at the question, then start again to have a go at the answer with me. So let's look at the first one. Have a look at this yourself. See if you can decide what the correct answer is, and then I'll discuss it with you after. Okay, so which two of the following should be included in an audit engagement letter? We need to take these one by one and see whether they should be in there. Remember, engagement letters really is a list of things under ISA 210, which we looked at previously. So number one, scope and objective is required. It's in the list. Result of the previous audit? No, and that doesn't sound right anyway. That would go in the strategy document. Management responsibilities? Well, yes, that is one of the things that's required under ISA 210. And number four, need to maintain professional skepticism. Again, that's the strategy document, not the engagement letter. So the ones we were looking for were 1 and 3. Answer B. Moving on then to question 2. Read this carefully, choose an answer, and then work through it with me. Okay, so this question really is an exercise in reading very carefully. Auditors have a professional duty of confidentiality under the code. Voluntary disclosure of information may be necessary in certain situations. Which two of the following situations should an auditor make voluntary disclosures? The key word here being voluntary. It is capitalized, but just to be sure that you notice that. So number one, if they know or suspect they're engaged in money laundering, well, that sounds like something we should make a disclosure for, doesn't it? But actually, it's not voluntary, it's required. You have to disclose information in that instance. So that's where the voluntary comes in here. Were disclosures made to non-governmental bodies? Well, that would be voluntary. Where it's in the public interest, well, that would also be voluntary. And then 4, well, if they suspect the client has committed terrorist offences, that is required rather than voluntary. So the answer we were looking there was D, 2 and 3. That question teaches you to read carefully. Okay, what about 3 then? Once again, read it carefully and then select your answer before working through it with me. So ISA 510 requires auditors to obtain written representations to support other evidence, or ISA 580 in fact that is. For which of the following matters would a written representation not be suitable as audit evidence? So we're looking for the one that is not suitable. So A, that all deficiencies in internal control known to management have been communicated to the auditor. Well, if you think back to our session on this, that is something that is suitable. So that would be part of the written representations to support other evidence. B, subsequent events have been dealt with appropriately. Well, again, that would be suitable. So that's going to support the other evidence that we gathered. C, payroll charge for which the accounting records were unavailable is correctly stated. Well, that wouldn't really be enough because it's not supporting other evidence. And remember, that's what written representations are all about. There is no other evidence. So actually, that would lead to a modified audit report. And D, management responsibilities is part of ISA 580. So the answer we were looking for there is C. Looking at question 4, which of the following provide evidence of existence of trade receivables? We're looking for 2. Read through them, see if you can select them, and then work through the answer with me. So taking these one by one, number 1, agreeing a sample of goods dispatched to sales invoices and the sales ledger. Well, that's confirming completeness. So it's not really looking at existence, it's looking at completeness. So 2, undertaking receivable circularization. Yes, that was one of our tests. We said for existence there are some downsides with it, but that is going to give you evidence. 3, review of post-year-end cash receipts. If those relate to year-end receivables, follow them through the sales ledger. Yes, that's going to confirm existence because if they paid it, it must have existed. So we check, did they pay through year-end cash, and then verify that to the receivables ledger. And 4, recalculating, well, we know we've already got 2, so that's not right. It would confirm valuation or allocation rather than existence. So the answer here was C, 2 and 3. Question 5 then, which of the following is not a responsibility of the auditor? Again, read through them, choose the one you think, and then we'll work through it. Okay, so remember we're looking for what is not the responsibility of the auditor here. So A, to provide an opinion on the truth and fairness of the financial statements. Well, that is a responsibility. That's the key responsibility. B, to conduct an audit in accordance with the international standards on auditing. Well, that also is a responsibility. C, to express an opinion on the company's going concern status is not required. That forms part of the truth and fairness. We don't specifically express an opinion on going concern. So that one is not the responsibility of the auditor. Lastly, for this section then, question 6. Again, read it carefully, select the correct answer, then work through it with me. So we're going to look at these one at a time. Number 1, observe whether the client's staff are following the inventory count instructions. That is a test of control. We're seeing whether the controls were implemented. Number 2, review inventory present in the warehouse for evidence of damage or obsolescence. Well, you got to think to yourself here, where's the control you'd be testing there? There isn't one. You're just looking at the inventory, so that's not a test of control, it's a substantive test. 3, obtain the last goods received notes and goods dispatch notes. Follow them through to ensure they're included. Where's the control you're testing? There isn't one, so that's a substantive test. 4, inspect and review management inventory count instructions. Once again, the controls are the instructions, so that's what you're testing. So that is a test of control. If you're asked for test of control, you must look for the control. If you can't identify one, well then it's not a test of one. So the answer here was B, 1 and 4.